I'm David Asman. Joining me on the panel today, our very own Susan Lee, senior correspondent Charlie Gasparino, plus Gary B. Smith, Cadena Group president, and John Layfield, CEO of the Layfield Report. Both are Fox News contributors. Folks, if you're in stocks, you're making a lot of money today. Take a look at the Dow soaring to close to 547 points on the plus side. President Trump sitting down with our own Trish Regan at a Fox Business exclusive. He's warning if Republicans don't keep the House, the party on Wall Street could be over.
Look at 401ks. So let's say we have a really bad time in 3 weeks from now. Your 401ks are going to go down tremendously. People are going to lose wealth. If they don't go out and vote, then they have themselves to blame because they'll lose wealth, tremendous amount. I built up $11.7 trillion in wealth. You report on it.
I built
Charlie's already imitating him, but Gary B., do voters see it this way?
Well, half the country does, I think. I mean, because that's what the percentage of the country that's invested in the stock market. The other half of the country that's not invested in the stock market, not going to care about their 401ks that are in mutual funds and things like that. I think it's a weak argument, to be honest. I think as long as Trump is still president,
built their 401ks personally.
What's that?
That it wasn't Trump who built the 401ks and every American.
He's being facetious.
He's built them up since the beginning of the year. Absolutely.
Actually, it's been flat since the beginning of the year.
Well, actually, since he's been elected.
No. I think
the
market's still positive since the beginning of the year, right?
John, you've been very quiet. Go ahead.
I think Trump.
Wait! I got 30 seconds.
We'll come back.
It's just like Bulls and Bears.
Yeah, really.
The original show. I think Trump deserves a lot of credit for tax cuts and for cuts in regulation. I think this economy is doing well. I think the stock market is doing well. However, all of his pro-growth policies are in place right now. So even if the House gets taken over by the Democrats, which history says that it probably will, nothing I don't think changes. In fact, some things which could be mitigated, the negative policies or potential negative policies of tariffs and trade wars could be off the table.
Yeah, I think so. And he deserves credit for a decent tax package. It's not a great one. We should point out that the deficit is going up tremendously for an obvious reasons, that the supply side push out of the massive corporate tax cut really hasn't materialized yet. Maybe it will, maybe it won't. I think he should have done
it on income. It certainly hasn't on corporate. You're right.
They should have done a bigger income tax cut for personal income tax cut. That said, here's the one problem with the Democrats controlling Congress. They're going to torture him every day. I mean, if you think he's off the hook these days,
Don't you think he loves it, though?
No.
He loves the. Yeah, you saw him in 60 Minutes. He loves it.
So he's going to love having his taxes in front of everybody. That's what they're going to do. I mean, the Democratic Party is run by lunatics.
As far as the market's concerned, sometimes the market likes it when nothing gets done in Washington,
The strategist advisory came out with this note saying no matter who takes the House, the stock markets always rally the year after midterms. And this is because you have this overhang that's cleared. And look at the stock markets today. We had the best day since March of this year. I think it's
very low volume, though.
Low volume,
not the conviction
you had last week.
Not the conviction you had on
average, but compared to last week. I think it's a reality. It's a reality this week that maybe corporates are doing better heading into the end of this year.
Charlie's right at one point. The conviction was stronger last week when it was going down.
We talked about this yesterday. It's people like Charlie, not you personally, Charlie. They could find
get personal.
They could find fault with the sunny day for crying out loud. We had a massive 1,300 point sell-off. Right. We tested the lows again. We're up 547 points
today.
Low volume. On lower volume, but it takes time to build. People are going to say, we could have been dropped lower, and we could have dropped lower the past few days. Instead, we're up. I think that's a positive sign.
We could have been low. We could be lower tomorrow. I mean, listen.
Of course, we could be lower tomorrow, but you got a 547 points. Says something, Charlie.
Here's the real problem that I think the bulls have with this market, and I don't know if I'm
a bull. Are you a bear?
I don't know what I am, but I'm going to tell you this. You're going to have higher interest rates if the tax cuts don't work according to plan, and there's some belief that they're not, and the Fed unwinding your balance sheet, that will be bad for the markets.
Yeah, but the one thing about the highest interest rates, the one thing that is mitigate that is the tax cut.
Good point.
2001 when the GDP went to 1%, it was because the tax cut came after the stock market crashed. This time it came before the bull market ended, and I think that is what is extending. The economy's on fire right now. S&P earnings can be at 20%. The one thing that could hurt, it's going to hurt our country. The Dems take over, going to do something stupid like try to impeach the president.
So look,
they're going to block the president. It's not good for the country, but it's going to be fine for the market.
Okay, well, that's way ahead. Let's talk about earnings right now, which is what we're in right now. And I'm talking about earnings in terms of psyches, how it impacts psyches, and that's probably more important for the markets right now than actual economics. And earnings to me are telling me that things are actually looking okay
now, but
heading into the
stock
end of
market,
this year. People already priced in the earnings per share.
By the way, talk about Netflix for a second. Netflix is up 14% after hours.
Yeah, 16%.
Actually, the longer-term outlook for earnings isn't as good. Next year, people are talking about a
next
slowdown.
quarter. Let's talk about next quarter.
Next quarter.
He's like got a cloud over him. Earnings are good now, but they're bad in the future. Deficits are okay now, but they're bad in the future. Inflation's okay now, but bad in the future. Yes, I see all the arguments going forward, but could it be possible that all this negativity going forward dissipates?
Okay, Netflix is on the screen.
So why would you accentuate the total positive when you know that people need to know the other side of the story just in case?
They always need to know the other side of the story. But if you look at the long-term history of mankind, it's better to be on the positive side than the negative.
If you look at the stock market,
that's a pretty long-term investment.
I bet you if you invested a penny in the stock market during the 1930s, you have a lot of money right now.
Of course.
But think about how many downturns you went through. Think about how many times you went inside.
John, let's bring it up to date. Let's bring it up to date and look to the elections. I mean, anything could happen between now and November, right? I mean, we could have another downswing like we saw last week between now and then.
We could. We probably won't. There's not anything on the horizon. Look, this mess in Saudi Arabia right now. If we put sanctions on Saudi Arabia, it could drive oil prices higher. That's going to take a while to manifest itself. There's nothing on the horizon right now as far as inflation. Rising rates are already priced into this market. The trade war is already priced in this market.
Yeah.
As far as before the midterms, we're only talking about 5 weeks away.
For now.
For the midterms,
do you notice that Charlie agrees with John? And look at the size difference.
Yeah, I know.
He's willing to.
Well, you have the boxer versus the wrestler.
John,
I'm not going in the ring with him, but I will say this. I think you do a great disservice to investors by not pointing out the real potential negatives out there, and there are a lot, including.
Would you put the government deficit as number one?
I think if this tax cut does not produce the supply side push that Mick Mulvaney and everybody's calculating, we got a real problem with deficits and interest.
We should mention, by the way, corporate revenues are down as a result of that big, but income, government income from personal taxes is up 1%. So it has had a supply side effect on one side of the tax revenue.
Look, it doesn't really matter how much money you give to this Congress. These idiots, and they are idiots, cannot balance a checkbook. You look at what happened under President Obama, and the debt also doubled under President Bush, by the way. You had $2.1 trillion in revenue that came in his first year. Now we're in a recession. $3.2 trillion his last year, and you still double the debt during those 8 years. But no matter what you give this Congress, they are going to increase.
Gary B., the higher interest rates go up, the more the government's going to have to pay for all the money it's borrowing.
Well, eventually, what's the biggest baskets of spending for the government? It's entitlements and it's the interest on the debt.
70% is Social Security, Medicare, and
John's
Medicaid.
right. No matter how much money you give them an unlimited budget and they'll still exceed it, right? But the problem is with no one, Democrat, Republican, Libertarian, is willing to get their arms around entitlement spending.
And that number,
that's the problem.
That entitlement number is not calculated in the official deficit number.
And I'm not sure it's going to get better.
$700 billion does not count, or 770, whatever it was, does not count Social Security and entitlements.
Right. I don't think it'll get better under the Democrats if they take the House anyways, because the largest entitlement spending for this year has been Obamacare. They're looking to expand that.
Doubled under Republicans. We're back to trillion-dollar debts. There's no difference between Republicans and Democrats as far as reckless fiscal spending.